Okay, g'day everyone. Hope everyone's well. Quick sound check, thanks folks. I'm sure I'm coming through okay. I can hear it myself. So welcome everyone to Workshop Wednesday. G'day Hamid. Brandon. Hope everyone is keeping well. I hope everyone is being a bit more nimble this week with the way things are. So, Shrewd, g'day Shrewd, CW, Deek, Ben, Betty, there we go, Ahmed again, Tara, Ricardo, Logan, Kings, Specularex, very good. All right, let's jump in, folks. So welcome everyone to Workshop Wednesday. Had quite a good response, LFMC, had quite a good response to the workshop last week where we went over and we came out with some targets and some trade management in terms of initial stops, but also how to trail our trade. G'day Java, slow steady pips. So we actually also looked at then, and I showed a couple of examples of some of the indicator-based trailing stops. So the one thing that we looked at quite a few. One of those was classic moving, just the moving average. I think that was an 8. And then the 21 being close above. So you can see here it would have kept you in this, close above or below. It would have kept you in till about here. So giving back a decent portion of the trade. So we also looked at excuse me, sorry. We also looked at then maybe just applying a moving average cross strategy, which was the 8 and the 21. So that kind of ended roughly the same. Here was the exit here. So kind of some basic exits, but I guess the point of it is better than nothing. G'day Morphees. So what we're trying to do, or what we are doing, is basically creating a mechanical trailing system so that it removes emotion from the or tries to remove emotion from the equation. A couple of the others that we did look at also were the using psychological levels. In other words, the swings. There's one. So we'd be taken out round about the same area. This is dollar yen. And within the stops, we had the big candle as a 61 or a 50%. So you can see this would have kept you in as well. Here's another big one here. This might have taken you out here or round about there. So when we generally get a surge in price, often it will come back and either test the 40-60 level, as I call it, or it'll reverse. So quite often the 61% keeps you in the trade. The other one, then of course we looked at the good old trailing stop. Bring that up a bit for us, the line width. So there it is there. Now that's an ATR trail. Now some of these aren't bad either. G'day, Wows. So a little bit earlier, but you can see here, round about the same. So what we're looking at is some of the decent runs, I suppose, folks. This one here. So we're looking at sort of trending runs. Probably not necessarily climactic type moves. Just general run. So you can see that one's probably roughly the same as well. And then the final one we looked at was the parabolic stop and reverse. Let me just widen that up a bit for us. So we can see here, in this area here, it actually got us out probably around about the same. But in a bit of a steadier trend, it actually got us out early here and even here. So the point of this was, now the thing with a parabolic SAR is it's like a parabola. It goes parabolic. So you can see in instances here where price really goes parabolic, it actually is not bad. So look, it's up to you whether you switch to one or the other. If you see price really making a bolt, that would be maybe a consideration. So really, at the end of the day, we came back with majority of them actually ended up roughly the same. With the exception of the parabolic stop, which was useful in parabolic moves. So we can see here, parabolic got us out here, the volatility stop there. There was probably a little better. Here's probably a good example. So you may even want to consider, there's one. Now we're cherry picking here. But when we get these big moves, the worst part about some of these big moves is not grabbing a large portion of it. So there's a couple that you may want to consider, a bit of food for thought. And then we looked at some of the targets. So if you missed this, folks, I suggest go back and have a look at last week's workshop, because it was a good one. It was a big one. It was a long one. But we looked at quite a few things. So I did get quite a few questions on some of these, which is good. And got a lot of people that really got something out of this. So that was good. Now, see, the whole point of what we're doing in trading is to make it as mechanical as possible, because you may have heard this before, we're just not hardwired to be able to trade properly. Goes against our natural emotions. So we've got to find a way to trade as mechanically as we can. We'll never be able to switch off our emotions, of course, and sometimes they can be helpful in terms of gut feel, I suppose, but we need to be able to find a way to stop that initial thought. I guess is probably the best way to describe it, that initial thought, which then leads to action. So what I thought we would do, folks, is just pause for a moment and just answer any questions, because we've done quite a few good workshops in a row. I thought we would just pause and just answer any questions that come up. So what I'll do is I'll put it out for questions. But in the meantime, in the interim, I'll just show you how to find the latest. I'll show you how to find the latest workshops. So if anyone's got any questions on the last couple of workshops, then speak now or forever hold your peace. All right, so go here, the Trading Lab. Trading Academy. Don't forget the trading tools, the market reports. Click on the Trading Academy. G'day, Tony. So here's Andrew's Trading Academy, and here's Max's. Here's mine here. Click on that. And the first three are all of the workshops. So broken it up into Module A, trading processes or process. Module B, trading psychology. Module C, member workshops. So this being a Q&A, this will probably go into member workshops. And then of course we've got Module 1, Module 2, 3, 4, 5 and 6. And those of you that like my anchor techniques, it's my objective method of trend. It's here, Module 5. Right. So Dow theory, and we get into short-term trend analysis and the anchors. So it's in there. So Module A was the last couple. So we had trendline examples was one. And then we had the targets and trade management from last week. So let's perhaps just focus on those. However, if anyone's got any questions on any of the trading, any of the technical analysis videos as well, then let's perhaps address those as well. So let's open it up to you guys. So the trusty trend line as well. See how well it's hugged price here. So normally we do get I put it out for questions a few days earlier, but I didn't do it this time. So Bad Green Devil has asked, Heikin-Ashi candles, any good instead of regular candlesticks? My thoughts. Okay. So thank you for that question. Good question. The pros and cons. Heikin-Ashi candles will take away the candles in between. Right? And they will give you more of, now I don't think I've even got it on this. No, I don't. They will give you, more of a trending look. So cutting out, I guess, the noise of candles in between and just focusing on the trend is probably one area. Now, I don't think I even have them. No, I don't. Oh, yeah, I do. Sorry. Pound daily. Look at that, I don't even have them. Oh, there we go. Red and white. All right, that may not help us. Right, so there we go. There's pound dollar. Oh, actually, let's go to dollar yen. So we'll go to the same chart that we're looking at. Come on. There we go. All right, let's go to the current period. So, let's make that blue. The background white. All right, so we can see black and whites. Let's have a look at this move down here. Now, in classical sense, you can see this run down here. We've got a lot of wicks in here, and this would show increasing momentum. So that's one good thing. Let's have a look at Optima. So this is the move down here. So we can see we are capturing the momentum reasonably well. But the wicks are similar. We've got the move back up. If we look at the bodies alone, we would look. It looks a bit. It looks like we have increasing momentum. So on this chart here, yeah, we've got reasonably similar. We've got a couple of pausing bars in there, of course, and the same with that one. Got a couple of profit-taking bars. It's important to see those. Let's have a look at some of the other areas. Let's have a look at this area in here. Let's have a look on the candlestick chart. We can see a lot of sideways, double-sided price action, telling us that this is probably, very choppy, probably corrective. So we can see very similar, not too bad. In terms of peaks and troughs, reasonably similar. So it cuts out a lot of the noise, we could say, in between. Cuts out a lot of the noise. Now, when we get to, let's have a look at some areas like lows in here. So we've got 3 candlesticks here. We've got a lot of wick action. And it looks like the closes are in up around there. So have a look at the daily. So daily here, we've got equal closes and a little bit of wick. And yeah, it's captured the highs and the lows relatively well. Let's have a look at maybe another area. So I've got a few more wicks going on. We can see the opens and closes. What we can't see though is the candle, the push in the candle. Right. In other words, it's only the body is only here. That's what it looks like. The body's only partially solid. Let's have a look at that, and we'll have a look down here. See the big solid candle here? This is, I guess, instantly visual. Down here we've got a couple of dojis. We've got a hammer. So clearly we're seeing indecision, and the hammer's giving us a clear decision with the shakeout at the low of kind of what's going on. This is all in hindsight, of course. So, big push, massive momentum, indecision, halfway back up the big candle. Another indecision day. Then we've got same day open, push right through, shake out. To me, this is a trap. This is a bear trap at the end of the trend. Whereas to me, I can't really see that here. All right? I can't really see the same psychology. Even though the opens and closes, we've got a high here that's not actually correct. Sorry, it is correct. 107.69. And that's slightly high. That might be just a data error. I wouldn't think so, though. So visually, I'm not seeing the same evidence down here. So I guess the pros and cons trend is all one colour. So we're not getting that, just, I suppose, noise in between that may throw some people off. If you're using it to exit, you can see you're actually exiting on the opposite colour. You're actually getting out maybe a tad early. The zones through here. Let's have a look at the high. Okay, yeah, that's relatively close. So look at the push through there. Yeah, we haven't got the gap is not as obvious. The pullback here, strong pullback, weak momentum. Not quite as obvious. It's there. Now, a lot of it too comes down to how well you can read it. So, short-term bar analysis for me, and I have looked at these, is a little more difficult. We are seeing, opens and closes, but not as visually easy as these. So the pros: easy trend identification, smoothed price action. The cons: can't see the shorter term price action quite as well. Can't see a lot of the sentiment in the candle straight off like that. See here, we've got an open here, a close here by the look of it. Yeah. Yeah, we've got a big bar down here. These look like solid bars. So short-term sentiment, not quite as easy. Basic candles. Pros and the cons. So the pros are, you can straight away see momentum in each candle, straight off. We've got an idea of the psychology of each candle, the battle going on. When you add volume as well, we've got obvious swings Right? When I put the swing chart on, Gann swing chart, combine it with the swings, I can get an idea of the swings a little easier. So for me, being able to see the candlestick patterns is all important. Even each candlestick. Weak, fake out, strong push, break of the trend line, pull back to the trend line, pausing candles, expecting either a complex or something. Push into here with strength, into the anchor with strength. I can see that straight off. So short-term bar analysis a whole lot easier. Disadvantages of candlesticks. Unless you can read short-term sentiment, they may not mean a lot. In other words, what's this candle? What's this combo here? Right? Unless you can read the candlestick patterns as well, then it probably won't help you in that area. Maybe a little noisier. Now, those of you also that learn about our gap analysis in there. See that? There's no gap. Gaps are important. But yeah, it's got price up here. So, look, each has its own pros and cons, or advantages and disadvantages. But for me, it's got to be candlesticks. Now, I can read the same sentiment on a bar chart. Right, so there's a bar. Let's increase the light, increase it so we can see. I can still see it straight off. I can see the swings. These are true swings in price. No, we don't even have it. Let's change the colour. I can still see the swings. I can see the sentiment. I can see the bar. I can see the big fake out here. I can see the bullish engulfing. I can see the morning star here in a pullback. So even with a bar, now that's because I've done a lot of study with these as well. And we were made to hand draw these. We were made to hand draw bar charts. So for me, it's really sunk in and it really helps. Okay. So I hope that kind of explains it a little better. But use whatever style suits you. I can cut time out and just have the swings. And I use these in my own work quite a bit. So all I'm seeing is the swings. There's no time. Time is irrelevant. I'm just seeing the swings in price. So Amer has asked about the well, there's your Renko as well. Where are we? Oh, good on you. So I might actually answer Richard's question. Richard? Richard's asked how I set the stops. All right. If you have a look, did you see this one last week, Richard? Did you see this? Because if you haven't, I suggest there's a good one to look at. Let's say we take the one sec. Let's say we take the inverted cup with handle here. Nice pull back here. I can almost put money on it. This will be right around the 20. Oh, there it is. You just get used to seeing price after a while. So if I'm taking the breakout through here, which is legit, my first stop is going to be above the area that I believe is going to be defended. So we've got the pullback here, push up here. I'm expecting that this is going to be defended. Now, when this starts to push through, we've got this big candle, can either bring your stop the higher that candle or above the breakout area. That's another way that I use, another trailing stop. If I've got a target, let's say I was targeting the anchor and I got in here. When it gets nearer to it, if I'm just going for one target, I will use, say, the swing first into this big one, maybe 61 when this paints. If I haven't already taken something out here, I should have, because this is a stall point, recent high. Now I'm very big on scaling out. 33% lots usually. So once I've taken this out, or once, even if I haven't, the last thing that I want to do is let price come back, take me out for a break even or worse, for a stop, full stop. To me, that's bad trade management from my behalf. So one profit taken out. Original entries there. I may bring the stop 61%. If this was my target and this is all I'm going for, then really I'm going to go bar by bar. And even in this candle here, we might find that it looks like there's a pullback and there's a few bars. So the stop was here. I'd bring it, say, on the 4 hour, because it's getting relatively close here. I'd then use the swing and the bar until it either hit the profit or came back and took me out. So that's what I call a bar by bar trail into the target. Because at the end of the day, I either want to get the target on the last part, or I want to get 80%. I can't handle going 5 pips. Oh, I've taken a break even. So, Richard, you can probably hear the wind outside here. Am I still coming through, folks? Haven't lost the stream? No. Okay, so Tony's asked one. Thanks, guys. Thank you. Yeah, very good. I have the chat on a different computer over here on my right, and unfortunately, not unfortunately, it's got a few things running, so it lags up a little bit. Now, yeah, Wales has said in regards to the candles or Heiken Ashi, you can read the price action psychology better in candles. You can. But if you're more a swing and a trend, and you're not interested in the short-term psychology, then Heiken Ashi may be better for you. But give it a try. Now, so Tony's asked, how do I judge strength of a trend? Yep. And Aimer has asked about the market commentary. All right, I'll do the market commentary first. So it might be a bit easier. Right. So this is the watch list that we put out. To make full use of this, you really need to go and watch the stream. And if you want, we go through this in order in the stream, then into these, and then into this one. So you can almost wind forward to get to it if you like. But we look at risk, and I look at the macro stage. In other words, the US stock market and some other internals, but mainly the stock market, US stock market, because it's the biggest stock market in the world. So if the US stock market is falling or is getting sold off hard, we're in a risk-off situation, and that will filter through into other asset classes. So I want to know whether we've got risk on, risk off, or whether it's neutral. So we've been pretty good with this week. We had neutral to risk on yesterday and today as well. Now, that will affect also the yen and Swiss. Now, some of you have probably noticed, but with the trade wars, let's call it, tariff wars, we're getting this sort of on-off very quickly, which is not ideal. It's harder to trade. So that's what we do with risk on, risk off. But also, if this is risk off, quite often we may find that only a few markets are moving, in other words, the risk currencies, and some of the others are stalling out. So we look at that first, and then the pairs that I believe are showing us better directional bias. All right, now we don't always get it right, but when there's a setup that's relatively close to triggering, then we can usually identify a level that I want to see broken, preferably with some sort of accumulation before it. But we put this list together in the Asian session. So the Asian session is not ideal for trading. We get a lot of fake outs. Quite often price will turn around in London. So, but most of the time we get it reasonably good. So the pair, the bias, and then you can look down here for the abbreviations, what these mean, and whether it's a breakout entry or a continuation So the breakout is your typical, we want to see a breakout or the breakout pullback when price pulls back. So there's those two types. So short or long, and when it triggers, I highlight that in purple. Away we go. Then there's some other ideas that aren't setting up quite as good. They may be B grade trades, but they're still good. They're still worth watching. In fact, this morning we had Euro New Zealand and Pound New Zealand and New Zealand CAD that actually pushed on this liquidity run, which was, to be perfectly honest, which was actually a bit annoying. I'll show you. Euro New Zealand. Here it was here, the pullback, massive pullback, climactic. I know my chart's a bit messy, I need to clean it up, but our bias was long. So we had just the classic head and shoulders, neckline, nice little coil. We're looking for trade through here, and bang, it did it. Right? So it did 65, 70 pips while we were analysing something else. Look. So a bit disappointing. Bang, it went. So bit annoying as well, because look at what it does afterwards. So somebody asked, is this a reversal? I said, no, I think this is a liquidity grab. Pull back, shake people out. Those of you that have been here for a while will know what I think of these shadows. If you don't, go and have a look here. Click on the Trading Lab. Module A. Gap analysis and candle shadows. Whole hour on gaps, candle shadows. Do you want to know about those, what to do about them? Go and have a look. Module A, right down the bottom. Here. So, to cut that, to summarise that, this is weak resistance, so don't be frightened of it. In other words, maybe the top though. Now, with all that shaking about today, our trend line, our channel, look where it went to, right on it. I've said before, I don't make this stuff up. We put this in before. Unfortunately, Pound New Zealand as well did the same. Look, through here. Bang. 50 pips. That was the level. We wanted to say. We put the level in and then we went and did something else. You can see there's only a few hours gone. And we said, nice shakeout through here. Push, consolidation. Let's see price come in here and break. Bang, it just did it all in one go. All right. Classic Asia liquidity grab. That's all it is. So, I've gotten off topic. So these ideas here are still good, but they're probably not as close to triggering as these. So the Aussie CAD triggered the last couple of days, Euro CAD the last few days as well. So these are still good for continuation entries, and that should have been actually, oh no, that's right. So then we've got counter trend. So same with the shorts. And then we've got these ones, which are counter trend. So what do I mean by counter trend? Right, pound New Zealand is counter trend. Why? Because down on the weekly, down on the daily, here's the anchor. But what I like is we're getting climactic price action, stalling price action, a nice little reversal pattern here, 3 inside up, this one is. Right, it's got a little bit more power. Now this is another thing you can only see with candles. We've got the stall here, see this? So we wanted to see a push through there and a test of the anchor. There you go, did it all in one go. So that's what I mean by counter trend. See there, pound New Zealand and dollar CAD. Does that help? All right, Tony. So, Tony, what was your question again, Tony? Trend. How do I judge the strength of a trend? All right, strength of a trend. Oh, very good, Amy. Thank you. Because I only stream in Asia, it's hard to put the it's hard to update the trade list all the time. All right. So how do I judge the strength of the trend? Let me go back to our blank page. So how do I judge the strength of the trend? Without using indicators. How about that? What I want to see, for starters, is the momentum on this side greater than the angle or the momentum of this side. That's one. Without Elliot. Without my friend Elliot. See, I was already drawing it, wasn't I? Okay, so we want to see, price nice and strong, and we may be hugging, let's say, maybe a 10 period, and we may have a 20 period as well. So the strength of the trend, how far away? So one easy way is how far away from your key moving average is it? That's one. But my main strength estimation of trend is long term. Where is it in regards to the 40-60 zones? How does price pull back? How do these correctives look? Let's go back to our example. Now this is hindsight, but we'll start right from here. So, forget this, we know all this, we can use this as a sample. So, strong bars, weak pullback, strong bars, weak pullback. Right, the trend is strong. So what do we got here? Strong, weak pullback, loss of momentum, reversal patterns, demand coming in. What do we got here? Demand, demand, demand. So how would we say the trend is here? We've got to say this is strong. Is the trend maybe weakening? Yeah, it is, slightly. We've got the anchor right here. So it looks like it's a breaking trend, but we've got strong move into it. So at this point in time, this trend here is strong. Now, when we look at the pullback, right, we can't even close into the 50%. So what's that telling us? It's telling us that this move is strong. So here's our 40-60 window. This is a great question, Tony. Actually, we're almost out of time. Get Mark started, and he now another way, as we saw last week, was the good old trusty trend line. You know, if we start getting trend lines that are accelerating, we've got an accelerating trend. Yeah, so Schroeder said the heads up, first break of the trend line. So we're just looking at the strength of the trend. But he's absolutely right. So what's another way? No, here we go. I'm going to do this example. Another way, look at the effort and how many candles. 3. Look at how many candles it's taken to get here. 1, 2, 3, 4, 5. 5 candles here. All right. So some of you will know there's a Fibonacci ratio in there. So what's our pullback here? I reckon this will be 38. 38. Can't even close above the 38. What does that tell us? That this is strong. So when it starts rolling, we want to be looking for opportunity to get on board. And those of you will know the 20 period is this rough visual aid. And look at how well the trend line and the 20 period have matched. It's pretty good. So why don't we just use 20 period instead of the trend line? We could. So how much it's going to go up? Well, I said it was going to hopefully keep pushing. So what about the 8 period? All right, what about the 8 period? Short-term strength. So what if we actually took the candles out? What do you think? We got short and medium-term momentum? Absolutely. What does it look like we've got? A trend change here, doesn't it? We've got a big push, pull back. We've got a big complex thing here, base. You got to remember, they are just price, aren't they? They're just based on price. I've lost the candles now. Look at that. What do you think? Look at that. How accurate was that? Now, don't worry, I hadn't prepared this before. Right? You get used to something. All right. We might have to leave it there, folks. Time got away. Very good. So, I know we didn't get a lot of questions, but a good little session, folks. Here's a classic pattern as well. Don't need many. No, you don't. Shrewd, do you? Once we get started, gold, short term. So my count. Back to the 20. Time and price. Looking for a push up. In Elliott terms, A, B, we're looking for C. And then I'm looking for 1, 2, strength. Yes, Wells, I do. Workshop every Wednesday, same Melbourne time. So, folks, if you are new to the room, this is what's there. Okay. Trading psychology. There's my journey. This is my trading journey. 11 years ago. So these are trading psychology. Member workshops. Look at them all. These are questions. So this one will go in here tonight. And then the big one, trading process. Look at them all. Top down. Playbook examples. There's even a couple of my stock scan techniques. This one here. How to avoid failed breakouts. This is a beauty. Thank you. Wows. Swing trading versus scalping. We even how to create a scalping chart template. Somebody said today how helpful these two were. Right? How to perform bottom up, how to perform top down. Recent trades. And intro to Elliott Wave. Our candlestick patterns. Oh, here's one here. Here's one candlestick pattern. Where is it? Here. One candlestick pattern, an hour and 15 minutes on one pattern. Do you think we did it thoroughly? Do you think we looked at it thoroughly enough? Absolutely. Look at it. We went into huge detail. Look at it. The criteria, the pattern psychology of one pattern. This one here, one of my favourites. Then we had a look at it on some charts. See it here? There's another one. Right here. don't forget, you can click on here and you can play it back slightly faster.
So let's have a look at this one. Here's the lead-in candle. 3 candles inside. Big, nice big candle.
And you can still understand it. There you go, Tony. There's one for you. Look, weak pullback. Strength, weak pullback, strength, weak pullback. We've got to expect this to continue. All right. So, binge away, folks. But more importantly, folks, start applying what you've learned. As Bruce Lee said, knowledge is not enough. One must do, one must apply. So start applying your knowledge, start honing your skills. Thank you, Tony, Celine, Richard. Yeah, trading is all about mastering a few things. You don't need to know everything. So just focus on a few things at once and master those. Okay? Don't just try and grab everything. I did that in the first place. Go and listen to my trading journey and you'll hear what I did. I did the wrong things and I've learned from that. All right, folks, take care and hope you can take something away from that today and apply it yourself. So those of you that are in Asia, I'll see you tomorrow. Otherwise, I'll see some of you next Wednesday for our next workshop. Okay, folks, thanks again for your company. Take care and trade safe. Bye for now.